The orange line is the S&P 500 index with average annual return of 11.4% for the past 10 years. What is this blue line with average annual return of 30% and beat the S&P 500 index by 5.5 times in total return for the past 10 years? Let's find out.
Till I can't no more. I got the horses in the bag. Horse stock is
Hi everyone, welcome to Investing Mania. Terry here. Do you know what is leverage ETF? Don't know? Never mind. Then how about TQQQ?
I know. QQ is thank you. QQQQ is like an echo. So it is thank you, QQQQQ.
Today, I'm going to explain what is leverage ETF, the pros and cons of it, how to invest in it with a lower risk, my favorite choices, and the biggest secret of leverage ETF that no one mentioned. Before we continue, please give me a like and subscribe to my channel if you like more investment and side hustle related video. As an appreciation, let me show you 3 adorable Shih Tzu puppies. Today's video is not a financial advice. Please always do your own research before making any investment decision. ETF is like a basket of stocks. For example, if you buy one share of VOO which tracks the S&P 500 index, you are actually buying the shares of 500 strongest companies in the US. Leverage ETF is an ETF that uses derivatives like options, equity swap, or futures to amplify the daily return of an index by 2 times or even 3 times. For example, if the index goes up by 1% in a day, 3x ETF goes up by 3%. If the index goes down by 1% in a day, 3x ETFs goes down by 3%. Today's video is sponsored by Webull. If you sign up a Webull account from now till 1st September 2022, you will get a free $100 worth of Google share. What you have to do is just to deposit 1,965 SGD, execute 6 buy trades with minimum trade value of $100 within 30 days. Besides, Webull also provides 0 commission rate for US stocks, options, and ETF trading. You can even buy fractional shares in Webull and set recurring buy on the stocks you want to purchase. This is a very good function if you are dollar cost averaging into your investment. I'll leave the sign up link in the description below. Benefit number 1. You can earn more with leverage ETF. For example, when the normal ETF goes up by 1%, the 3x ETF will go up by 3%. Benefit number 2. The amplified compounding effect works better on gains. For example, if you invest $100, when the normal ETF goes up by 10% each day for 3 consecutive days, the 3x ETF will go up by 30% each day for the same period. At the end, the normal ETF will have raised by 33.1%, but the 3x ETF will have raised by 119.7%, which is 3.61 times the return of the normal ETF. In another scenario, when the normal ETF goes down by 10% each day for 3 consecutive days, the 3x ETF will go down by 30% each day for the same period. At the end, the normal ETF will have been down by 27.1%, but the 3x ETF will only be down by 65.7%, which is only 2.42 times the negative return of the normal ETF. Benefit number 3. The fees of leverage ETF of around 1% is much lower than using margin with interest around 3 to 11%. If you don't know what is margin, margin is actually the borrowed money from your stockbrokers. Disadvantage number 1. The loss of leverage ETF is also amplified. For example, when the normal ETF goes down by 1%, the 3x ETF will go down by 3%. Disadvantage number 2. Leverage ETF needs greater return on the underlying index to break even. For example, if you invest $100 and the S&P 500 drop by 10%, for the normal ETF to break even, it only needs S&P 500 index to climb 11.1%. But for the 3x ETF to break even, it needs S&P 500 index to work harder to climb back 14.29%. Disadvantage number 3. The fees of leverage ETF of around 1% is much higher than normal ETF fees of around 0.03% to 0.1%. Disadvantage number 4. And this is the scariest one. Many YouTubers are saying that
you will lose everything.
And even Investopedia also mentioned, if the underlying index ever declines by more than 33% on a single day, a 3x ETF will lose everything. Wow, So it means later my 3x ETF will tell me, bye bye master, and leave me forever? Nope, this is not true at all. On 19 October 1987, the Dow Jones Industrial Average (DJIA) was a godlike 22.6% in a single day, and it was known as the Black Monday. I thought Monday is always blue.
Monday is so colorful, it's either black or blue.
After the Black Monday, the SEC uncles and aunties said, boy girl, you guys cannot simply sell the shares and make the index fund drop like godlike one. If not, I concede defeat. That is when they implemented something called circuit breaker trading HODS. In this circuit breaker, there are 3 levels. Level 1. When S&P 500 dropped 7% from prior day's closing price before 3:25 PM Eastern Time, it will trigger a 15-minute market-wide trading HOD. Cool down. You first blood until the market so red already. Level 2. When S&P 500 dropped 13% from prior day's closing price before 3:25 PM Eastern Time, it will trigger another 15-minute market-wide trading HOD. Wow, you killing spree already still not enough meh? Level 3. When S&P 500 dropped 20% from prior day's closing price, trading will be halted for the remainder of the trading day, no matter when it happens. I concede defeat lah. Now everyone also cannot play already, you happy lah? If you go and search in Google or YouTube, you will most likely end up seeing lots of people saying that leverage ETF is only suitable for day trade. But do you remember the chart that I showed you at the beginning of this video? Yes, the blue line is the 3x leverage ETF called UPRO. Huh? Did you just say I'm pro? Thank you. UPRO is the ticker of ProShare Ultra Pro S&P 500 ETF. It corresponds to 3 times the daily performance of the S&P 500, and this table shows you the return of UPRO since its inception on 23rd June 2009 to 30th July 2022. Here is another 3x ETF ProShares Ultra Pro QQQ, ticker TQQQ, which tracks 3 times the daily performance of Nasdaq 100 index. TQQQ has a total return of more than 10.7 times the return of the non-leveraged ETF QQQ since its inception on 9 February 2010 to 31st July 2022. If you invested $10,000 in TQQQ 10 years ago, you will have a whopping $1.2 million already by the end of year 2021. Even after the market drawback in year 2022, you will still have around $470,000 by the end of 31st July 2022. But if that $10,000 is invested in QQQ at the same time 10 years ago, it will only be worth around $62,000 by the end of 31st July 2022. Wow, it is so good. How come no one suggested me to buy this? It is because all leverage ETF are very volatile and risky, and quite often you will see more than 40% drawdown from their all-time high. And the most recent drawdown is a godlike 75% from the all-time high. So if you sure buy it at the wrong time and see it drop 75%, your heart will be like, aduh, tak boleh tahan. So, is there any lower risk way to invest in leverage ETF? Yes, there is. First method, you can dollar cost averaging. Separate your fund into a few portions and buy in at every 20 to 25% drop. You can also choose to recurring purchase no matter what the price is. Second method, limit the weightage of leverage ETF in your portfolio according to your risk appetite instead of all in. Third method, you can sell put option at a strike price lower than the current price to earn premium. For example, if you look at TQQQ, the current price is $33.73. If you sell a put options at $24 strike price, which is around 29% down from the current price, you can earn $64 premium for one option contract. It is a godlike 2.16% monthly return on your money while waiting for the ETF price to come down. To understand further on how to sell options to earn free money every week or every month, you can watch this video. I'll put a link in the description below and at the end of this video. If you have any question, please comment down below or join our Telegram channel and group for the latest update. So that's all for today. Thank you so much for watching. I'll see you next time.